Hello, guys, and welcome to the show. Listen, I want to talk about the U.S. dollar and the U.S. dollar index for a minute and the start of the show before I actually get into the markets. Well, today is Friday, the 28th of September, 2018. I'm glad to have you guys here. Now, here's the thing about the dollar. The dollar is at 95.29 today, and the dollar hasn't really been going anywhere too much up. The Fed, over the past few years, has done everything that they could possibly do to support the dollar. They've even let's get right into this, how they've done it. Gold and silver. A while ago, not right now, but a while ago, they started crushing the price of gold and silver. Well, they weren't exactly doing it themselves, but they're like working through stuff like JP Morgan Bank and stuff too. They allow them to get away with shorting the price of silver and gold. What they do is they create paper short contracts that represent gold and silver like a derivative of gold and silver. They're not the real underlying asset. What they actually are is just paper, and they're settled in paper. They're settled in dollars. They settle these in dollars. They don't settle them in the actual physical metal because they don't have the physical metal to settle them in. And so by doing this, they're able to manipulate the price of gold and silver downwards. Why they've turned a blind eye to all of this and allowed this to happen when this is illicit behavior is because for the greater good. The greater good is to support the dollar. And at first, when they manipulated the price of gold and silver downwards, you move the price of gold down, you're moving the dollar up. So it supports the dollar. But after a while, it lost its effectiveness. So then they had to move to one of the biggest, most powerful tools of all to support the dollar, because the dollar, every time they go to pull the moorings away, the dollar can't support itself. And so when it became less effective, almost like a drug, if you take a drug too much, after a while, you won't even get high with it anymore. You develop a resistance to it. And this is what happened with the dollar. It developed a resistance to the price of gold and silver going down. Then they had to move to something even more potent, like a more potent drug. So the next drug they moved to was the oil price. They manipulated the oil price downwards. And it really supported the dollar well. It moved the dollar up to about 103 on the U.S. dollar index by moving the price of oil down. They drove the price of oil down like a spike all the way down to $29 a barrel. And we seen the effects of this at the pump. Do you remember last year or whatever, how cheap it was at the pumps to get your gas? When oil was $29 a barrel, we seen really cheap gas, and a lot of people went out there and bought brand new SUVs and stuff like that, things that are gas guzzlers. We went back to buying gas guzzlers again because gas was so cheap. Well, that started to lose its effectiveness after a while, and the dollar started to drop off from 103 on the U.S. dollar index. It dropped all the way down into the 80s. Now, they're using a different technique, the Fed. They're forced to raise interest rates to support the dollar and to start withdrawing liquidity from the system through a process called quantitative tightening. This is the last ditch effort to support the dollar. And now we've just seen a rate hike, and it's having little or no effect on moving the dollar index up, and little or no effect on the price of gold anymore. It's starting to lose its effectiveness. Everything's losing its effectiveness at supporting the dollar. All of the manipulations that they've done. But now at this point, with the quantitative tightening that they're using to support the dollar right now, and also with the raising interest rates, if they stop at this point, the dollar's dead. So they have to continue. They're trapped. The Fed's trapped. They're trapped also because if they continue, they're going to pop all these asset bubbles. A real estate bubble, the auto loan bubble. I could go on and on and on of different bubbles that they blew up during this period of quantitative easing and everything when they were getting away with putting huge amounts of liquidity into the system. But now that game's over. In fact, most of these games have ended. And now they're down to the nitty-gritty where they're caught in a catch-22 situation where they can't move. They're caught between the devil and the deep blue sea. They cannot continue with quantitative tightening, withdrawing liquidity out of the system without having a stock market crash. And if they try to quit, then the dollar is doomed. Because the dollar's barely moving right now, and they just raised interest rates, for crying out loud. And they're withdrawing $50 billion of liquidity out of the system every month. And the dollar's not budging. It should be going up. It's not budging. This is a very, very bad sign for the dollar. And this is what I wanted to point to this morning before I get into the market. So let's open the charts right here, and let's get right into it with Bitcoin. It looks to me like Bitcoin turned a corner, but it's a little bit tentative just yet to say. I'm just kind of holding back just a bit yet, but I'm going to show you where I think it turned a corner. We're looking at Bitstamp price, and here at 60.94, it looks like she turned the corner. And what it looks like to me is if you mark this spot right here at 60.94, right? And you move upwards, what you see is the lows are not as low each time. The lows are starting to get less low, and the highs are starting to get a little bit higher each time. So this high right here was roughly 65.86, and the next high was 68.25. And then what's happening is now she's going down to make a less lower low. So she'll probably make a low in around 6,500, and the next high is probably going to be up towards 7,000. It's working its way back up again, and at a certain point, once it passes a threshold of $8,500, then we're back into a bull market again. So it's creeping up out of the hole at this point, and we got to keep our eye on the cryptocurrency because it looks like it could all of a sudden heat up and go back into a bull market again. Really, it could. Now, cryptocurrency market capitalizations today. We're looking at a mixed bag in these coins. Some of them are down, some of them are up. And we're looking at $219 billion market capital and 52.1% Bitcoin dominance, which is pretty much normal for Bitcoin to have that sort of dominance, 52.1%. Now, we're going to take a look at the silver price today. We're moving up today in the price of silver. Silver's heating up a little bit. It's up 29 cents, which is one of the best days we've had in a long time. Now, here's the thing about this, though. I don't get excited when I see it do that, because they just smash it right back down again with these paper silver contracts. I don't know how many paper silver contracts they must have, but they must have the awful slew of them to keep the price down low like this. You know, it must be awful diluted. In other words, many more silver paper contracts than there is actual physical silver out there to sell. And they've been keeping this game going for a long time, but when this takes off, when this finally breaks free, it's going to break free with a tremendous amount of coiled energy behind it. Now let's take a look at the U.S. stock market. The Dow. We're down 19 points on the day so far, which is only a minuscule drop. 19.56, 26,420.37. That's where we stand right now with the market. The market's as high as it's ever been right now. And it's more stable than it was last time when it reached its peak. to tell you the truth. There's more stability in the market right now. But this is hinging on the bond prices, you know, so we're going to get there in just a second. Let's take a look right now at oil price, 72.22. It's a little bit on the high side. The powers that be are probably going to take oil back down into the $68, $69 range pretty soon, I imagine. They have to keep the price of oil down to support the dollar again. And OPEC, I believe, my personal opinion is that they work in conjunction with America to keep the price of oil down. I believe that the part of the reason how they were able to knock the oil price down to $29 was they used the money, probably from the Exchange Stabilization Fund or something like that. Money they allocated money out to lend it to from the banks again, to lend it to the big oil companies so that they could do a lot of drilling, fracking type oil wells. And this turned America into a major oil producer, and this slaughtered the oil price. And they knew that they were going to do that, and it was all in support of the dollar. That's what I believe. That's my personal opinion on it. Let's take a look now at bonds and rates, because this has everything to do with what the stock market's going to do. Today we see a flattening yield curve. It's pointing toward a flattening yield curve because we got the low end rising, nearly 1 basis point, 0.009, which is almost 1 basis point on the low end, and the long end is falling. So we don't have far to go with the short ends where it matches the long end, which is a flat yield curve. We're not far. I mean, it's only less than 1 basis point. I'm not a basis point, but less than one point between a flat yield curve right now, because we're only 3.17 on the 30-year, and the 3-month is 2.20. That's less than one point. So now let's take a look at the dollar index today. 95.29. It's moved up a little bit, but really considering, yeah, and you know what's interesting is the fact that the dollar's moving up today, and so is the price of silver. I find that very interesting because typically when the dollar's moving up, typically the price of silver goes down. So anyway, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.